This is the Meaning Business Podcast, your go-to source for business tips, advice, growth, and exit strategies, hosted by Coudrey and Peter Spinda. Each episode, we bring you real stories, expert insights, and practical advice to help you succeed in today's market. Let's dive in.
Hello and welcome to the Meaning Business Podcast, the podcast for anyone wanting to buy, sell, or grow a business. My name is Pete Spinda, I'm one of the co-hosts, joined by
Bruce Coudrey, the other co-host. There's no more co-hosts, just two. That's enough.
Absolutely. I think after 50 plus episodes, people are starting to know who we are. But you know what? We're still going to bore you every single episode with the introduction.
Well, I asked to. But, one day we might have another co-host and then,
A co-host.
That's right.
Yeah, absolutely.
We need to get people ready for that.
We do. Now, so I signed up to a subscription service. This was about 3 years ago, and I was using a particular tool, paying on a monthly basis. And after about a year and a half of using this tool, I just didn't need it anymore. And I was spending about, maybe $90 a month or something like that on this subscription service. So I thought, okay, I'm going to go cancel it. And I contacted the company to go cancel it. And then they sent me back an email saying, no worries at all, happy to cancel it. You owe us, I can't even remember how many months worth of prepaid subscription because I'm canceling early. And I'm thinking, what do you mean I'm canceling early? Isn't this just a standard subscription service? Typical with others, where you cancel whatever you want, stop, start as you want. And they're like, no, we want to draw you to the attention. We want to draw your attention to clause X, Y, Z and in subclause X, Y, Z, where it clearly states that should you wish to terminate, you're on a rolling 12 to 12 month contract with us, and therefore you need to pay it out. And I'm like, oh, you got me there.
Yeah.
Because you know what I did, and this is something that we all do. I made an assumption, and it made an ass of me, right? Assumptions make an ass out of you and me.
Out of you and me, yes.
And so that's really, I guess, that the crux of what we want to talk about today is really not making assumptions and also not just sort of assuming or bypassing conditions, bypassing things that might be in a contract because you make the assumption that, it's just standard. It's standard stuff. It's not important. I'm well covered. I'm well looked after.
Yeah. And, so for me, what I wanted to exactly down that path is talk about the fact there are standard conditions, or in some states they're called general conditions. Now, they might seem boring, but don't run away, guys. Just try and hang in there because it could be very beneficial.
Well, it's critical. I mean, if in my case, so it was about $90 a month, and I can't remember. Let's say it was 10 months that I still owed them, so that's $900. Okay, not a lot of money in the scheme of things. But when it comes to buying or selling a business, getting the standard conditions wrong can cost you a little bit more than $900. In fact, considerably more. It can cause the whole deal to fall apart.
Well, so what I've learned with conditions and terms and conditions, which go with any contract, when it comes to business sale contract, there's actually this beautiful set of what they call standard conditions in every state for the business sale. Now, they do vary. So for example, I didn't want to get into this, but for example, in Queensland, they call it buyer and seller. In in Victoria, it's purchaser and vendor. And you can, screw up the contract if you refer to it the wrong way. So that's a small point, but that's one of the differences. But the good thing is we've got these conditions, general or standard, they're usually called in each state, for a business sale, which have been invented usually by the law society of that state. And they've been perfected, and they consider or contemplate all the variable things that can go wrong in a business sale, and people don't use them. And if you're aware of them, we become aware of these simple rules, just like in football or driving on the road, keep left, stop at a red light. Once we have rules and everyone knows the rules, it's easy.
But I understand that, but I'm sort of thinking, okay, well, let's say I don't have my license. I haven't got a driver's license. I'm 30 years old. And let's say I predominantly catch Ubers and taxis. So it's driven by some other person who's got a license.
Don't need to worry about it.
So why should I care? I mean, ultimately, Bruce, I'm paying my accountant, I'm paying the lawyer, I'm paying the business broker. Why should I care as a business owner about the standard conditions?
It's a good question. That'll probably come up a couple of times. So first of all, it is simple. It's actually not that complicated. Now, I'd really encourage people to think about the fact that these rules are simple. So what are the rules in soccer? Tell me what are the main?
You're asking the wrong person.
Really? You kids play?
No, I know some of the rules. I know some of the offside rules,
There's not
penalty
I think
kicks.
there's a lot of rules.
It's
So
not
first of all, you
heavy with rules.
What's the first rule? Do you reckon? I reckon you can't touch your hand.
Oh, that's 100%.
Okay.
Okay. Yeah, you're right. You can't touch it with your hand.
So you know the offside is probably another rule.
Yep.
The goalie can touch it with their hands.
Within a certain boundary.
Yeah.
Absolutely.
If the ball goes out, you throw it in.
Yep.
So that's basically the rules. If I knew just those rules, I could probably pretty much play soccer.
Yep.
So in business sales, there's a set of rules which have been established, and they're variable. You don't have to agree to these rules, but we generally consider that these are the rules or the guidelines. And just if you know the rules, you know, you've never played soccer, but I tell you the 5 basic rules. Now you can go and play soccer. You can play it properly and not stand there wondering what's going on. And it's the same with a business sale. You don't need to be the coach or the expert or the star player, but if you understand the rules and you've got the rule book here to refer to, which is a really simple rule book, you're gonna do so much better. It's going to be so much easier. So yeah, that's the thing that I wanted to talk about today, which is the fact that there's a rule book and we need to keep it simple. You know, a good game is a simple game. A good contract is a simple contract. But if we know the rules and we know that their rules are there, we don't need to reinvent the rule book. So this is what sometimes happens, that people who don't know the rules of a business sale enter an agreement to buy a business and they engage people to help them to create terms and conditions. And sometimes they won't use the standard rules. They'll use different rules and they'll pay more money to have the rules rewritten, or sometimes they'll pay more money to have a bespoke contract produced. I'm not saying you shouldn't do this, by the way, but the rules are already there. And if you, as a buyer or seller, particularly buyer, I guess, look at the rules, and I'll tell you why it matters more to a buyer in a sec. If you understand the rules, then you're going to make it easier for everybody, particularly yourself. Why the seller, it doesn't matter quite so much for the seller, is that usually if they've got a broker, a business broker working with them, the broker's going to help them to not when they've got the buyer and they're ready to sign the contract, but when they list the business for sale, they're going to go through the rules in the standard conditions and explain it to the seller so that they've understood, okay, now we know how we're going to sell.
Gotcha. Now, although they're called standard conditions, can we change them? Can we add to them, edit them, remove them?
Great question. So we have the standard conditions, and then we can have what's called special conditions. And the special conditions prevail over the standard conditions. But a good special condition, and I'll give you an example in a minute, will say this condition deletes or overrides or replaces the standard condition.
Gotcha.
And again, if you don't know about the standard conditions, how can you say that this new condition replaces the standard condition? So just knowing the rules, the standard rule book, got them here.
Yep.
For Queensland, just makes it so much easier. Everything's been thought through. And I wanted to illustrate that right now if we can.
Yeah, go for it.
So first one is how simple it is, right? So, you know, what is stock?
It's a good question. It's product inventory that you've got on hand that you can sell.
So if I make trailers out of aluminium and I weld up aluminium and I put wheels on and brake lights and I sell a trailer, and I've got racks of all the products that I use to make the trailers, is that products waiting to go be assembled? Is that stock?
Oh, that's a good question, because you can look at that in different ways, couldn't you? I'd say it's stock. It's not stock?
Well, it could be. I would call it inventory. There is a difference. But whether it's stock or inventory, the deal is, the general rule is, you're going to sell it from you to the buyer at your cost price. You don't make any money on it.
So there's an interesting thing, that we're both in business, but our definition, the interpretation of the definition is slightly different.
That's right. So have a read of stock in trade, which is a standard definition there. Do you want to read it out?
Stock in trade means all goods owned or agreed to be bought by the seller, which are to be sold to third parties, whether by wholesale or by retail in the course of conducting the business, or any goods which are listed as stock in trade in any schedule, annexure, or appendix to this contract. So therefore, it's the finished product
what we call stock.
which we call stock.
So if I make those trailers and I've got finished trailers waiting to be sold to customers and you buy the business off me, that finished trailer is stock.
Yep.
We could agree that that's stock.
Yep. So
And
then
I'm
the
going to sell
inventory.
it to you at my cost price. I'm not going to make any money on it.
Yeah. Okay. And so the inventory then is a separate
Yeah, we need to
discussion,
define that. That's
separate
right.
definition.
But the
about
good
that.
thing about this is it does set down some rules. The standard condition 4, can you just go to it? Standard condition 4. This is a bit of reading here, Pete.
Stock in trade and work in progress.
Yeah, just read the 4.1 A, B, and C if you could. It's a bit long.
Okay, get ready, ladies and gentlemen.
Yeah. Don't worry. This is what stock is and how stock's treated in a business.
Okay.
Standard rules.
Standard. So
starting point.
4.1A, where clause 3.1 applies, in addition to the purchase price specified in item L, the buyer must at the date of completion take over and purchase from the seller all the goods and sellable stock in trade being in and on the premises at the landed invoice cost or as mutually agreed between the seller and the buyer. So clearly stipulated.
Landed invoice cost.
Point number B, unless the seller and the buyer agree as to the value of the stock in trade for the purpose of clause 4.1A, which we just talked about, a stock take appointed by the seller. A stock take must be carried out by an independent stock taker appointed by the seller and the buyer, and in default of agreement in that regard, appointed by the seller's agent. The value and sellability or otherwise of such stock in trade must be determined by the stock taker. The stock taker's fee in respect of the stock take must be borne equally by the seller and the buyer.
We pay each half.
So that makes it clear.
Third.
4.1C, the stock take must be carried out after the close of trade on the nominated date of stock take referred to in item MA. And lastly, 4.1D, the buyer must pay for stock in trade to the maximum nominated figure contained in item MB on the date of completion. If the value of stock in trade exceeds that amount, the buyer may elect to reject such items selected solely at the option of the buyer, as may be necessary to reduce the total value of stock in trade to the maximum nominated figure. So that basically means if I've got extra in addition when we're doing the handover, I may decide that I don't want it, and so you keep it as the seller.
Correct.
Interesting.
So these rules thought through years and years and years of business sales. We've done about 5,000 business sales. These rules are pretty good. This is a starting point. Now we might decide that in my transaction, the trailers, they're not stock, they're inventory, or that's inventory, and we're going to come up with a different arrangement.
Yep.
And you can.
Yep.
And if you do, you say, we'll agree to the standard conditions, but standard condition 4.1C has changed because of da-da-da. But this is a starting point. If buyers and sellers know that we've got these standard rules and rules cover so many things, it's a great thing. So
That's interesting. And this sort of is really interesting for me from an advisory point of view. Because when you understand this, you then start to realize and understand why we usually say to people, start preparing for your exit, for your sale early, so that you understand the moving parts, so that when it comes time to listing the business, going through due diligence, all that sort of process, you're already prepared and ready.
Exactly right. So every good business broker knows these rules, and a buyer and a seller should know these rules, and the lawyer for the buyer or seller are going to use usually these rules. If it's a share sale, a lot of these rules are slightly changed and slightly different, and we need a special contract for that. But these rules really don't change. The provisions within there, the things that you need to consider are all pretty much covered here, which is great. So it talks about things like a trial period, statements, warranties, which is, that assets are unencumbered, and, they're going to tell you if they've had a legal claim or action against them. It talks about restriction of trade, tuition, assistance, requisitions, which is a really interesting one. I want to drill into that a bit more. Employees, employee entitlements. So one of the biggest points of conjecture in a transaction is employee entitlements. So what can happen is, particularly in small business, I want to use a hair salon as an example. So if we're selling a hair salon, the price might be pretty low, say $200,000, which for the seller is a lot of money. And we're selling the business, and they've got staff there, and the new owner is going to take over their business. They're going to retain the staff. So the seller's going to sell the business for $200,000. They're going to pay some debts that they have out of the $200,000. They're possibly going to pay a commission to the broker. So they're going to get less than $200,000. What they don't often think about is the fact that the employee entitlements, and it's mentioned in standing conditions, need to be passed over to the buyer who maintains that provision for long service leave and sick leave. And it can be quite a lot of money if someone's been there for a long time and accrued some entitlements. That's why we need to think about it when we're getting ready for sale. But these rules are there for this reason, to enable everyone to understand what we're doing. So the normal thing is that the seller passes across to the buyer, whatever that amount is. So the buyer's got it there if they have long service leave or sick leave after they've taken over the business. So the good thing about the rules is if we understand it, you don't get a nasty surprise. If you're the seller, because that $200,000 sale price for the hair salon gets eroded by all these things. And if the provisions for entitlements are $35,000, all of a sudden I'm not getting $200,000, I'm getting way less.
Yeah.
And I might have a loan or something else and I'm disappointed. So knowing about it, understanding it, calculating it when you're listing the business, getting it ready for sale, preparing it for sale, knowing the rules is really so critical to creating a good outcome and planning how we're going to get there.
Interesting. And there probably isn't any, but are there any traps in here that if either party doesn't know about or doesn't address, it could actually give the other party an advantage? Or is this more a fair sort of equilibrium for everybody?
Good question. I can't think of anything specifically, enables one party to have more power over the other. But a good example of the kind of thing you're talking about is a trial period, which is standard condition 11. And this came out many, many years ago, back in the bad old days of the 70s and 80s. Businesses had a lot of cash and they would take cash and pay cash so they didn't have to declare it. So it was undeclared income and expenses that didn't get caught or captured for tax, and the ATO didn't get all the money. That's changed a lot now, but it still it appears to be the case. And what happened was, pardon me, it's so weird, is that the government accepted, state governments accepted that people transacting with cash, and that the real tax figures and the tax figures and the real revenue were different. So they enabled or put into business sale contracts, and most still have it there as a standard thing. They'll do a trial period. So my books say I'm making $1 million a year, but in reality, I'm turning over $1.5 million a year because I'm taking $500,000 in cash. It still can happen. So the trial period provision, this is about the traps that you can take advantage. The trial period says a buyer can come in and check the business for so many weeks and check that the revenue is whatever it is. And if it does that, they have to buy. And if it doesn't do that, they don't have to buy.
Gotcha.
But here's the trap bit, which is a good bit for if you don't know about it. So it says in here in the standard conditions, but a lot of people don't apply that, and they should. You can't do the trial period until every other provision of the contract has been satisfied. So, you need to, often in a retail business, you need the landlord to approve you, you need to get your finance approved, you need to finish your due diligence, you need to understand how we're going to deal with the employee entitlements, assistance, tuition, restriction of trade. You get all that stuff out of the way, then we can do the trial. What you don't want is someone to come and do a trial and they haven't got their finance approved or the due diligence done. That's really unsettling. So the good thing about these standard conditions is it considers that. And so if you're a seller and you know that, you can say to the buyer, yeah, you can do a trial, but you've got to have all these other conditions satisfied. A lot of people I've, in the past, particularly not so much these days, have enabled people to do the trial and not take advantage of the provision in standard condition 11 where they get everything else satisfied first. So they've done the trial. It's been a complete mess.
Interesting.
Yeah, so really what I wanted to highlight today, I think, Pete, was that we have these lovely set of rules and terms and conditions, and it's not fine print. That's the other thing. We talked at the beginning about your subscription, getting out of it. This is not meant to trap by any means. This is meant to be plain English and easily understood by everybody, and simplified things so that we can sort of say, that's included, that's not included. This is what I'm going to do, this is what I'm not going to do. And it in my opinion, considered pretty much every eventuality. Now, there are some things that it doesn't cover. I'll just quickly go down that path, if that's all right.
Yeah, go for it.
Sorry, I'm getting geeky and nerdy. I'm really sorry.
No, it's important.
Yeah, it is. And this is where expertise does matter. And this is why I often say you get what you pay for. You need to get good advice. So I'll give an example. Again, the hair salon, selling a hair salon business. many hair salons sell gift vouchers. So if I'm selling you my hair salon and you buy it, I might have 500 gift vouchers that I've sold that are out there in the market, so that when you take over, people are going to come in and redeem their voucher. And you're going to have to go either A, oh, mate, sorry, I don't recognise that, or yes, I'll do that, but I'm going to lose money.
Yep.
So we need to, because we know that's going to happen, we need to have a provision in the contract to allow for that. And the standard conditions as they are in all states don't have that provision. And there's a few little things that have happened recently, like either Bitcoin or social media or AI or ownership of domains that isn't quite right or up to date. So there are probably some areas where good advice still is required to make sure we've got a good contract.
That is interesting, because if it's not covered by that and we make the assumption that the contract covers it, but it doesn't, you could buy a business, let's say an e-commerce business, and potentially, if we didn't think about who owns the domain name, we'd assume that the domain name comes over.
Yeah.
Big assumption.
So my point today is that if you're selling or buying, it's really easy to find the standard conditions for a business sale in any state in Australia by Googling it. And if you are selling or buying, you should have a quick look over those. And if you find it too hard to comprehend, then get a good lawyer to help you. Not an accountant, a lawyer.
Because I was going to ask, and I wrote this question down, do I need to read this? Like, there's a lot of pages here.
14 pages there.
Read before, some of it's very legally. Do I need to read it, or is it enough just to review, but then have a conversation with my lawyer about it?
Everyone's different, but if you can read it, have a read of it. It is fairly plain English. Can I read one?
Yeah, of course.
As an example. And
so best practice is basically read it.
It would be my strong recommendation to read it.
Yep.
And then see if you agree with it.
Yep.
So I like that. There's a couple of little nuances in here which are really good. So this is the one that's called assistance. So in a standard sale, we have assistance, which is what happens before you settle, and tuition, which happens after the sale. Usually assistance is small and tuition is large. So I've got it around the wrong way. It's tuition before settlement, assistance after. So assistance, the seller or a nominee of the seller familiar with the business, so it doesn't have to be the seller, must attend the business on and from the date of the completion for the number of business they set out in the contract during normal business hours or such other hours that may be agreed, at no cost to the buyer, to give tuition to the buyer in relation to the conduct of the business, and to introduce to the buyer the customers and clients of the business, the suppliers of goods, services and stock in trade used in the business, is the bit I love, and generally to use his or her best endeavours to retain for the buyer the benefit of the goodwill of the business. In other words, to make sure they get what they're paying for.
Yeah.
I was holding on to that for ages. So do you think that's plain English or not?
To me it is, but I think it can be, especially for those of you listening and watching who are migrants potentially, there might be some language barriers, understanding some of that language. But look, I think, I've been reflecting on a question that I asked before, do I need to read it? And really, best practice should be, we should be reading all the documents. And there's a minimum at having those conversations with our lawyers. But you're right, you get what you pay for. And if you get the wrong lawyer, wrong advisor on board, they're going to guide you the wrong way. That's typically when you're going to realize, down the track that, should have paid more, should have got the right advice.
Yeah, well, you're going to save yourself money if you read it.
Absolutely.
So, okay, that's interesting. So I think it's pretty plain for, but there is this, I'll just finish on this note, actually. No matter how clear these things are, sometimes there can be misunderstanding.
Yeah.
You can read words and get different meaning from it.
Yep.
So when you sell a business, you can sell it as a asset sale or a share sale, right? That's what we talk about. And sometimes people don't call it an asset sale, they call it a business sale. But if you call it an asset sale, some people might think that means I'm buying the assets, I'm not buying any goodwill, which is not what it means.
Yep.
But people misconstrue it. So even when it's written to be as clear as possible, it can still be misunderstood.
Oh, I think anything can be misunderstood. And that's why these standard conditions are important. But that's why communication, asking questions. And look, my advice to any business owner out there, or anyone that's looking at buying a business or selling is there's no stupid question.
Yeah.
Ask them. Ask
Yeah,
whatever's on your
exactly.
mind. Don't ever think like, the people are going to think that,
I'm an idiot.
yeah, you're an idiot. You're not. The only stupid
You're an
questions
idiot if
are the ones you don't ask.
That's right.
That's it. So that was good, and I think the message is clear. Don't assume. Ask the questions, and take it seriously, because it's to your own benefit, and it's to your detriment if you don't take it seriously, and if you just ignore this.
And if you understand this and you read it, you're going to get a lot out of it. You're going to get a lot of what is stock? What is plant and equipment? How do we deal with debtors, creditors, that sort of thing? How can I be sure they're paying out any loans on any assets that I'm buying? So all those things are covered in the standard conditions. Highly recommend people read it, and sit down, have a coffee, make sure it's a strong one, and read it. And I think you'll be way better off for it.
Fantastic. Thank you, Bruce.
Thanks,
That
everyone.
was interesting.
Thanks for hanging in there. Cheers.
Cheers. Bye.